maybe just to start, I mean, you've been innovating and pioneering at Ant for a number of years, and starting a few years ago, began your work with blockchain technology specifically, and thinking about how blockchain technology could help move money. You have this whale platform. I don't know how many people are intimately familiar with it, but why did you start this journey into blockchain technology? And what can you share about that journey so far with whale platform and how you've tried to apply this?
Okay. Yeah. Firstly, thanks for having the opportunity to join this fireside chat. So as you may know, Ant Group is actually born from Alipay, which we actually started mobile payment by e-wallets from China. So Ant International actually heritated the international business from Ant Group. So now we operate actually globally, managing cross-border payment around many nations. About 4 or 5 years ago, so we sensed that increasingly, more and more payment business require 24/7 and instant payment, and also require on-demand liquidity. For example, when we facilitate people in cross-border travel, so they need payments, also need tax refund. And we found that tax refund experience is bad because a lot of times you have to, at the end of your trip, queue in a long queue in the airport for hours to get your payment. And the tax refund only come back to your credit card in a few weeks. So we want to do an instant tax refund product. But to allow this to happen, you need to have instant liquidity capability, which serves you 24/7 and allow you to see the money on an e-wallet instantly. Okay. The second example, when I was managing the treasury for Ant internationally, is that I got increasingly demanding requirements from my business people, saying that my merchants want to have calendar day settlement, which means you need to settle to them on the weekends, okay, or during the golden week or bank holidays. And no existing banking service can cover those kind of needs. So we started to talk to some banking partners, started with using blockchain as a messaging layer to have instant liquidity requirement. And luckily, a few banking partners satisfied our needs. So we built a treasury platform called Whale Platform, which covers more than 10 currencies and a good amount of treasury activity. The key purpose is to allow us to get 24/7 instant liquidity needs to support those cross-border payment use cases which will require instant and on-demand liquidity in multi-currencies, right? So far, this has accounted for approximately 1/3 of our treasury activities around the globe. Through these, we are actually serving millions of merchants and users to enhance their customer experience, to allow settlement to them to happen faster, to allow them to actually get access to liquidity in a 7/24 instant manner. So our experience so far is quite good. Yeah.
That's amazing, and I think I don't think many people realize the kind of progress that has already been made with this. So naturally, are you also exploring stablecoins now, and sort of what's your view or on the prospective use of it?
Yeah, indeed. So when we get deep or more and more into the blockchain technology, so with the development of the regulation here in Hong Kong, Singapore, and other jurisdictions, we found that regulators formed tokenization projects, right? Like Project Ensemble in Hong Kong, and some other project somewhere else, which allowed us to do tokenization. Firstly, tokenized bank deposit, right? So with these, we will be able to use a format which carries not only the messaging, but the value. So now we're looking at 3 formats of digital money. One is CBDC. The second one is tokenized bank deposit. The third one is well-regulated stablecoins.
Right.
So because the previous 2 tokenized formats, CBDC and tokenized deposit, had its strength, but also had its weakness. For example, CBDC we have joined a few pilot projects here in Hong Kong and in other jurisdictions, which helped us to move liquidity, but on a pilot basis. It still needs time for CBDC to grow. Tokenized bank deposit is good, but it works in one closed loop bank ecosystem. It has a few challenges, i.e. cross-bank movement of token, cross-currency move of token, and cross-chain, because some of the tokenized deposit issued on different chains. Well, regulated stablecoin is another format we'll look at, which seems to have its advantage and actually allow us to address some of them, even most of the pain points. Luckily, we see that in Hong Kong, in a few other jurisdictions, we see government is trying to launch clear regulation against stablecoins, put stablecoins to be in the category can be used by large corporate or in the regulated players. So we're happy to see this change. So we are keeping a close eye on the development, and thanks for your team. So we had a lot of exchange of ideas how actually regulated stablecoin can be used in cross-border payment in treasury management.
Yeah. Well, it's been a theme here, during the forum here as well, and I think just building on something that you said, which is as these regulated stablecoins come into availability, right? We have this big milestone in Europe, solving the interoperability, solving the different networks, the cross-chain, so there are, I think, powerful solutions that become possible there. But stablecoins are also unlike a tokenized bank deposit, right? The laws and the regulations are saying, hey, these are full reserve. These are like cash, right? And so when you think about what these regulated stablecoins are, what they represent as a digital money, how do you think consumers and businesses and merchants, how will they think about these in terms of trust and adoption? Does the nature of these new kinds of digital money, does it kind of convey kind of a new capability that a person or a business would look at differently than kind of traditional electronic money?
So I think from trust perspective, I think the regulation and legislation process actually gave consumers and probably to-be users like us more trust, more confidence to gradually study or apply or use regulated stablecoin more in our daily operation, treasury operation, to support cross-border payment and other activities. So regulation, legislation bring trust. I think that's one thing. The second one, I think, is driven by use case, okay? Because a lot of adoption of blockchain tokenization are still in the POC stage or in the Web3 world. But in the real world usage, I think the use case combination of stablecoin, another type of token, with cross-border payment and other use cases will bring inclusion. This can be used for cross-border remittance, settlement to small and medium merchants, to lower the cost of payment for small merchants who are doing business globally. These are the kind of use cases we actually bring in inclusion, which actually strengthen the original spirit of blockchain and token technology.
We're finally getting there.
Yeah. And these actually would drive the adoption for retail users, for small merchants, small business, and also for large users like us to get into the token market, to look into the possibility of using regulated stablecoin. More.
Yeah, I see that, of course. I'm interested, we heard earlier from a couple of key policy leaders here in Hong Kong. We have, I think, stablecoin legislation and rules coming. We heard the legislative member say, maybe by March, be a settled matter. We'll see.
Touch
wood. Yeah. I guess as a huge enterprise that's core business is moving money, right?
Yeah.
What's important in these new rules? Like, what do you think is important? What makes a regulated stablecoin? What makes the regulation of stablecoins good? Like, what are the things that you look for that then in turn give not just Ant, but other SMEs or others the kind of confidence for this to be a thriving environment? What are those most important things that regulation can accomplish?
Yeah, so I think so far we have seen very positive development related to stablecoin regulation. And a few things are relatively clear. For example, the requirement of KYC and AML standard, which actually link this to the mass adoption into the large financial service or real world business. For example, like reserve management. All these things are relatively clear. I think I would like to mention two areas we actually still wondering to see whether this could be clearer or kind of clarified more to allow mass adoption. One is accounting treatment.
Yep.
So we have been talking to different accounting firms, advisors, and also looking at the financial statement of those exchanges or those companies are listed who have adopted or use stablecoins. The accounting treatment varies, right? Some of them treat them as cash. Some of them are treating them as financial asset. Some of them are even treating them something like intellectual property, something like that. So these kind of uncertainty or inconsistency accounting treatment had made it a question. For many companies or institutions, when they want to adopt, when they want to use stablecoin, they will need to spend a lot of time to decide or to research and decide where actually to put them on a financial statement. So that's one thing I think is still yet to be clarified. The second one is the international recognition of stablecoin. So I'm actually have the luck and pleasure to see Jeremy launching the USDC actually under the MiCA regulation in Zurich, right, during the 0.0 event.
Yeah.
But now, so the stablecoin regulation in different locations are not actually mutually recognition with each other. For example, the stablecoin issued in one jurisdiction, whether it could be recognized in another jurisdiction, and then the vice versa. And then if we are adopting regulated stablecoin in cross-border payment or in a global arena, so how are we going to handle a stablecoin issued in one jurisdiction and we move the money to another country or state, continent, and what is the regulator in another jurisdiction will think about it.
That becomes my headache.
Yeah, so that's something that we hope that over time, working with you and other industry specialists to actually further address.
I mean, these are great points, right? And I think with these stablecoin regulations coming all around the world, at least in the major financial market centers, I think it will become a settled matter that these can be classified as like cash equivalents on a balance sheet. That's really important. And we're seeing that actually explicitly stated, for example, in the Payment Stablecoin Act in the US Congress. It specifically says this, which would be helpful for then all the accountants as well. But that international issue is a huge one, and so I like to say Circle is sort of the regulatory guinea pig. So USDC is a global stablecoin, and so as like a new regime comes online, they have things to say about how does the foreign issued stablecoin work, and we're seeing a model which is almost like global banking, where there's a local regime, there's a local registration, there's some specific safeguarding requirements that are local, but then you can still maintain fungibility for the digital currency as it moves around the world. And so then behind the scenes, Circle needs to manage distributed treasury management, distributed reserve management, holding capital, managing risk, all of this. We have to do that behind the scene. to make it work, which is what we're doing now in multiple jurisdictions.
That's amazing part when I heard you talking about it, how you manage a distributed treasury management behind it. So when we feel simple to use USDC here and there, but actually is like Swiss watch, right?
Yes.
Running behind it to allow this to happen.
I don't think people realize the amount of complexity that's there. I guess as a major company that's looking at this, if you're thinking about those SMEs, or you're thinking about let's say there's stablecoin law here in Hong Kong, and all large enterprises here in Hong Kong say, okay, how do I use this? You've looked at this closely. You've stood up your own infrastructure using blockchain. What kind of advice would you give to other businesses that are now saying, okay, it seems like this is a thing, it's happening, it's accelerating? What advice do you have for them right now?
Probably I will summarize this into 2 points. One is I would suggest people adopt a use case driven approach, which versus to a tech driven approach. Because sometimes there will be initiatives purely driven by the technology, which seems to be fancy. For example, AI or large language model or tokenization. That's one tech-driven approach. The other approach is use case-driven approach, which you will find the real pain points or the problem in your organization or in your business, in your industry to be solved, and apply a technology to that. Okay, and then this will make your trial within your firm, within your industry, more convincing. And on the road of applying this, you may have difficulties, you may be challenged, right? And then the use case approach will actually help you to stand there, actually being able to not only do a POC, but drive this to a minimal viable product or even a mass or mass adoptions in the end. So use case driven approach. The second one, I would say, regulated innovation. So I'm actually leading a few key innovation initiatives in my firm. So when you drive this, you need to consider a lot of factors. When I say regulated, not only probably the regulation, but also like compliance, legal, accounting, and those related risk management. You have to consider those things actually in a structured way when you launch innovations. So move money is not an easy thing, as you mentioned. It triggers a lot of other factors. So if I may probably summarize, it will be use case driven and regulated innovation.
Yeah. Well, I think I agree with those points. This has been a one-sided conversation. I want to make sure in the context of a fireside chat that if there are things that you're interested to hear from me, I'm very happy.
So, Jeremy, I actually having a question related to programmable payment.
Yeah.
I think now we have already started the tokenization journey. It's a regulated stablecoin represented by Circle and tokenized deposit. Quite a few kind of jurisdictions have launched it, CBDC and others. So probably have down 20-30% of the tokenization journey. But another big potential, which has been talked about a lot, of making money tokenized is actually to use its programmability benefit. So I don't know. I mean, what's the plan for Circle? And what's your view on the programmability could drive the further development of stablecoin and can further actually release the value of stablecoin in use cases like cross-border payment?
Well, it's something that we think about a ton. In fact, when I co-founded Circle over 11 years ago, my background before Circle was in internet platform infrastructure, programming languages, tools, all this. And what got me excited was this idea of programmable money. So even 11 years ago, there were no smart contracts, but there were white papers about smart contracts. And there were no scalable blockchains, but there were technicians saying, here's how we're going to scale blockchains. there were no ability to like build protocols on top of blockchains, but there were ways that it was being talked about. But I believed that ultimately the programmability of money was going to be the breakthrough here. And so in many ways, we're just now getting to a point where you've got regulated stablecoins, it's becoming legal electronic money, and the blockchain infrastructure, the public blockchain infrastructure is getting to a point where basically storing and moving the money is basically instant and free. And so that's great. It's the programmability that's the fundamental unlock of utility. And so if you look at where we started with USDC, actually, we launched it 6 years ago. And in 2018 and 2019, where I spent time, where the Circle team spent time, was with all of these projects that were building protocols that used smart contracts to create new automated ways of using these stablecoins, which is what we call DeFi today, right? So basically, it was this idea that you could have money Lego bricks. You could have a Lego brick for exchange or swap. You could have a Lego brick for borrow and lend. You could have a Lego brick for an option or a derivative. And so basically, DeFi is programmable money. Mm-hmm. DeFi is basically creating protocols that are collections of smart contracts that intermediate and automate like the risk management, the value movement, and in really powerful ways. And so today we already have huge size markets that are run entirely with machines and programmable money infrastructure on the internet. So we've already achieved a lot. Now, what's interesting is now we go to this next phase where the infrastructure is scalable, smart contract executions is much more readily available. Like enterprises there's the tools to build with it. It's becoming much more enterprise ready. We're kind of approaching what I call the iPhone moment of blockchains and stablecoins. We're not quite there. But what happened when the iPhone came out was there had been like 17 different competing mobile operating systems. You had everything from Windows Phone to BlackBerry, Symbian, NTT Docomo, Samsung, this, all of that, right? It was a mess. And then you had the iPhone, and it created a combination of user experience and software development and hardware that wow, you could actually build apps for it. But no one had any idea in 2007, truly, no one had any idea all the kinds of apps that would get invented. And then if you remember the first campaign for the iPhone, it was there's an app for that, there's an app for that. And everyone their mind was blown by all these different apps. And things became possible that weren't possible before, like you combine a GPS with 3G with a smartphone and you could revolutionize transportation, Uber, right? So what I'm excited about with programmable money and stablecoins is what we haven't thought of. And that, like the iPhone, where there was a kind of open platform anyone could build on top of, stablecoins are like that too. You have an open, programmable, composable infrastructure, and developers can come and invent things. And so I really think that, and this is a little bit of a cop-out in terms of answering your question, which is that what I'm most excited about is that all of the things that people are going to invent with programmability have yet to be realized. There's been a lot realized, like DeFi is evidence that you can do very sophisticated things on chain. But when I think about commerce in the future, and commerce, all of the complexity of commerce between firms and customers and everything, what happens when so much of that, all of those types of relationships can be codified literally and programmatized on chain? That, I talked earlier about sort of on-chain commerce, not as like I'm paying for a good, like a traditional payment, like with Alipay and a merchant, but like on-chain commerce, like the inner core of commerce moving on-chain. I think that's the kind of thing that becomes possible, and we haven't quite realized what that actually translates to.
Yeah, that's great. I think you mentioned a few things which actually quite hit our kind of point of interest.
Yeah.
And also the things that we felt amazing of. You said that programmability has been used for DeFi. So we are actually passionate to see how it could change, improve, or even revolute cross-border payment industry using programmabilities.
Yeah.
And
you have a composable FX.
Yeah.
Right? You have on-chain FX, known counterparties, liquidity there, instant settlement, straight-through processing. Now that it's a building block that anyone can integrate into their commerce application.
Yeah, you also talk about digital commerce. We were born from
Yeah, you guys are the big deal.
E-commerce.
Yeah.
So we yet to look forward to see the programmability can further reduce the cost of payment to facilitate more and more flexible e-commerce format to allow the full potential to be released. Not to mention the AI. The large language model and the fast development AI technology, which may further empower the programmabilities to be more dynamic to serve our needs. It's great. We saw great possibilities down the road.
Well, it is. I think it's a special time right now. We're on the cusp of a lot of major change, and it's wonderful to be able to share the stage and talk about this with everyone here.
Yeah.
Thanks.
Great
again.
pleasure.
All right.
And very exciting.
Thank you, Kelvin.
Thank you.
Yeah.
Thank you, Jeremy.